Can financial advisors give tax advice? Let's talk about what they can and can't do when it comes to your taxes. All right, so you're probably wondering, because you're doing your retirement planning, you're talking with your financial advisor, naturally the tax conversation is going to come up. So how do you know what tax advice they can give and what they can't give? Should you be listening to them in any way, shape, or form? Was what they're doing illegal? Is it legal? Where do you draw the line? That's what I want to cover in this video today, given my 23 years of being in the financial advisor space. All right, so what can financial advisors actually say? What kind of tax advice can they give? Can they not give? For the most part, financial advisors cannot give tax advice. The only ones that can really give you legitimate tax advice is your CPA. Now, financial advisors will cross over in the tax side because, for example, say you have an IRA, they'll probably tell you, yes, you put in with tax deductible dollars, they gross tax deferred, and then it comes out and you do get taxed on it. So if you ask them those general questions, the questions you can pretty much Google yourself and find out for yourself, they can tell you that. They can tell you the consequences of certain investments. Now, they may not tell you how much tax you'll be paying, that's where a CPA will come in, but they will be able to give you some certain general rules when it comes to that. Roth IRAs, for example, yes, you put in with after-tax dollars, it grows tax-free, comes out tax-free. Yeah, there's certain little nuances, like if you take it out before 59.5, could there be penalties on the gains and things like that? Yes, right? So there's always these little rules that financial advisors can address, but just know that if you're saying, what can I do to reduce my taxes, right? What can I do to save taxes? Now, they might say contribute to an IRA, but let's be honest, even if a CPA says that, I call bull on them. Because if they say, well, contribute to your 401k or IRA, well, yeah, it reduces my taxes today because that money now counts as less income coming to me because I'm now deferring that income till later. But really, I still have to get taxed on that down the road. So, you have to ask yourself, like, okay, is this advice even any good for the first part? Secondly, is it going to be accurate? Because remember, tax rules can change, especially on retirement plans. 401ks and IRAs can change their rules at any time. Even Roth IRAs, at some point, Congress could say, you know what, we don't like it. Now, IRS can't change Roth IRA rules, but Congress can, because Congress is the one that created the Roth IRA in the first place. They could all of a sudden say, you know what, based on these certain parameters, if the Roth IRA fits in this category, it now becomes taxable, right? And they can change those rules at any time. So remember that any advice that someone's giving you, even a CPA as well as a financial advisor, those rules can change. They can become something different than they are today. But if, again, you're looking for ways to save on taxes, what can I do to reduce my tax bill? For the most part, a financial advisor is not the person to talk to. This is where having a qualified CPA or EA or enrolled agent, someone that's an accounting professional, will be the best bet for you. So just be aware that if your financial advisor tries to give you some tax advice, maybe they're saying, hey, there's this extra little tax credit thing you can do, there's this or this, just be aware that that's dangerous. There was one financial advisor that I remember he came to me, he said, hey, here's this new deal. You can do these R&D tax credits. They're amazing. Now, research and development tax credits are a legitimate strategy, but the way he was promoting it, he was almost pitching it like it was its own program. And the thing that's dangerous is that not everybody can qualify. So if they're trying to fit everybody in that one little box, you get your hopes up, maybe even start to act on some of those strategies, but then later on the IRS says, what are you doing? You can't do this. This does not qualify at all. Remember, they were not a qualified tax professional. This means you could get audited and get really knocked with a bunch of taxes because you try to somehow circumvent the system or you just didn't do it the right way. Now, I will tell you, not all CPAs will do it the right way either, but at least there's a better chance that you'll have success if you do it that way. Now, I've seen some other financial advisors say, oh yeah, get this captive insurance company. You set this up, you'll save lots of money in taxes. But guess what? That's one of the blacklisted things the IRS does target for audits. And if you don't fit all the criteria, even if they say that's a great tax strategy, guess what? You can lose money there too. You could actually lose on an audit battle with the IRS. In fact, you almost guarantee you'll get an audit with the IRS. And if you went to a normal CPA, most of them would probably tell you, yeah, legitimate strategy, but in your situation, this may not work. So just be aware, just be really careful. When there's financial advisors, they're not tax professionals. Always consult your CPA. Even my own clients know this. They always know that I'll say, this is what you've been able to do, this is what you could do, but consult your accountant first. That's always what I'm going to defer to. This also applies on the flip side. If you have a CPA trying to give you financial advice, don't listen to that financial advice either, right? They can give tax advice, but don't let them give you financial advice and investing advice and things of that nature because, once again, they don't know. I'll tell you this, good CPAs are hard to find. Just because they say you can't do something doesn't mean you can't do something. Now, there might be some really clear defined laws, but here's what I've noticed. Some accountants that call themselves conservative accountants are usually accountants that I would say are more ignorant accountants. They say conservative because they'll say, well, I don't know where the line is. I don't know what's legal and what's not. So I'm just going to go as far away from the line as I can and call myself conservative. But really what it means is I don't know what I'm doing, or I don't know all the rules, because it's almost impossible to know all the rules. Therefore, I'm just going to go as far back as possible. And even though you could be saving tens of thousands of dollars a year on taxes, I'm not going to tell you about it because I'm not confident I can give you that advice. And that's the case, whether it be with a CPA or an accountant, as well as the case with financial advisors. There are plenty of well-meaning financial advisors that really just don't know. Here's one of the biggest issues I have with financial advisors. They are good at being able to sell you products. In fact, when I was a financial advisor, the traditional mainstream one, I was literally licensed to sell you mutual funds and insurances and annuities and things like that. I was licensed to sell, right? Not licensed to kill, licensed to sell. And it didn't make me any more of a professional investor. It didn't mean that I was amazing at picking stocks or mutual funds. I literally just try to match you up. And a lot of times I just gave you a little questionnaire about what's your risk tolerance. And then I would say, great, based on your risk tolerance, you want to go into this moderate aggressive fund. Ta-da, it's all done for you. Easy. Although you might not make great returns, here you go. And I had no control of the market. I didn't know what I was doing. Ironically, the more I've learned about investing as I've done my own investing and even became financially free myself, which by the way, financial advisors do not know how to become financially free themselves. That's why they're often still financial advisors. That's why they call them brokers, because they're broker than you and I are, right? They're actually out there just selling you stuff, much like real estate agents who never invest in real estate. And so they're selling you stuff, but they can't ever retire themselves. Why would you trust that advice? So once again, if you're trying to get tax advice, go to the professional, go to the CPA, but be careful as well that you want to make sure you have a good CPA. And I'll give you this as a bonus tip as well. If you're getting a good accountant, get a proactive accountant. So often, and we've met with hundreds and hundreds of clients over the years. So often we get a client that has an accountant that they love. They think the accountant's great. Now there's a lot of people that get accountants they don't love, and they come to us sometimes just for the tax savings alone, just to help them with that. But a lot of times they go to the accountant and they say, all right, well, can I do this? Can I do this? Well, they have to ask the accountant those questions. What's bad is that many times, this is what shouldn't happen. You shouldn't have to become the person that has all these questions to ask them if you can do it or not. They should be the ones coming to you saying, hey, have you considered doing blank? Have you considered this strategy? Have you considered doing this? By the way, you're a business owner. Have you considered what kind of corporation you have and how you can split the salary versus your owner draws? Were you even taught that by your previous accountant? Hey, have you ever had a situation where you're able to pay for the use of your home office, right? How about that? Can you do the Augusta rule? Have they ever mentioned those things? Have they mentioned about paying your kids? How that's tax-free income to your kids and it's a reduction of your right, it's a write-off for you and your business, right? Have they mentioned all these kind of things, these strategies? Or do they just say, send me your numbers when it comes after January 1st, and then you send them the numbers, they say, well, here's your tax bill, or here's your tax return. And that's all they tell you. If that's it, they're a passive accountant, and I would consider getting a new accountant. I like active, really proactive accountants that say, hey, you know what, it's July, we should be planning right now. Hey, it's even February, we should be planning now. Well, now, a lot of them won't be doing a lot of strategy in February because they're trying to deal with taxes. But if it gets to like May or June, after tax extension deadlines are done, they might say, let's start strategizing. Let's make sure we can get all your tax write-offs this year before it's too late, because you might be meeting with them again in November, realizing there's some things you haven't done yet. So you want a proactive accountant that can actually help you with that. Oh, big warning. Speaking of financial advisors versus accountants, I personally do not like hiring financial advisors. Of course, naturally, some people might call me a financial advisor, even though I'm the anti-financial advisor. I do not recommend using financial advisors that are also CPAs, that are accountants and financial advisors. What happens is they become the jack of all trades, but expert at none. They become really just okay, mediocre accountants, and then they're mediocre financial advisors. I'd rather have those people separate. I like to have a financial advisor who can also work with my CPA, and those two work together, they communicate together, and then you're on the same track because they're working together for you. That's the best way you can have a financial advisor and accountant work together where you get good tax advice. If you're looking for like a really good CPA or somebody to use, somebody who actually is proactive, actually we have a link below you can click on right here to go connect with them today. We're not the accountant team, but we do have somebody who can actually help you do that and analyze how much money they could be saving you, especially if you're a business owner or have a side hustle. Check that out now.